Hey guys, how are you? Andy Suku, founder and CEO of Y2K Credit Solutions. I have a very, very, very important topic to talk to you guys about today. And this has to do with business credit and CPA. So we're coming out with our business credit class, billing and fixing business credit A to Z. It's August 9th. We'll talk about that later. But I want to talk about a CPA, what a CPA does and how they correlate with billing business credit, be able to leverage your business, going to the banks, getting loans. I want to talk about that, right? To the left of me, I have Jay from Bakari Consulting. He's been Y2K's accountant for almost a decade, right? Very professional, very versed in his industry. And he's actually going to be in our business credit class too, because it's in our business credit class, billing business credit. There's a lot of things you need a CPA to do. And there's a lot of noise on social media right now with a lot of people saying, this is how you do build business credit, this is how it works. And a lot of it is fugazi information. It's fugazi, I'm telling you, it's not accurate. So I brought Jay on today. We're going to talk about business credit. We're going to talk about CPA. We're going to talk about opening a business and putting loans in your name. Sure. So Jay, introduce yourself to the people, and then we'll get into this topic.
How you doing, everybody? I'm Yusar Jay Bakari. I've been a licensed New York State CPA for the last 20 years. I started out with bigger firms, PricewaterhouseCoopers, Ernst & Young. That was pretty much the first 5-6 years of my career. Then I was a director of a mid-sized firm for 5 years. And then after 10 years of that sort of experience, kind of getting to know ins and outs at a high-end level and a mid-tier level, I started my own practice about 10 years ago. So since then, we've had a full-service CPA firm. We set up businesses. We give tax consulting advice. We do accounting, bookkeeping services, multi-state operations. We do a whole bunch of stuff. So if you're a foreign person that wants to invest in the U.S. or a U.S. person that wants to invest abroad, or if you're a small mom and pop shop, or if you're looking to buy a house, invest in real estate, or set up a specific type of company, we'll walk you through the ins and outs of what you're trying to do. So we do a lot of consulting and hand-holding and trying to develop the clients and get them to the place where they want to get to.
And guys, so pay attention. When I said introduce you to Jay, a CPA, I didn't say a tax preparer. I said a CPA. There's a big difference. And I think people need to know that, because when you're starting a business, we'll get into that. Right. But what's the difference between like a tax preparer and a CPA? How far can a CPA go and how far can a tax preparer go?
Right.
And before he answers that, a lot of our celebrity clients, we refer them to him to do their work, because a lot of these guys go to these mom and pop shacks in Brooklyn.
Right.
And these guys are just saying, hey, give me these numbers, give me that number. But I've seen no documentation, right. Filing taxes, you're overpaying your taxes. So let's break that down, because people really need to know that.
Well, you got to understand, tax is very hustle type of game or whatever. So during tax season, you'll see everybody pop up and they'll promise you the highest refund and advances on your refund and all this stuff. There's a lot of fraud in the tax game, let's just put it that way, right? So CPA is somebody that passes a very hard exam, gets qualified, and that's what typically the big guys use, right? Somebody on Wall Street, middle class, upper middle class people, because they know when they get more educated, that's the type of person to use. Now you can go to like a tax shop. It's a lot of like
H&R Block.
It's not even H&R Block. It's like you'll see Best Tax Services or Honest Tax Services or Worldwide Tax Services. They're not CPAs. They just open up a corp. They start doing your taxes, and they know the very basic stuff. So, for example, I'll get a client, like a business client, and they literally miss a lot of deductions. They don't even look at your bank statements, what you're truly entitled to get. So they'll give you like a low ball quote, and you'll be like, wow, it's not that expensive, but I'll use them. So people kind of go into them because they'll charge $100 or $150, and they'll do a terrible job. And at the end of the day, they might cost you more money, just by using that service. And also just remember something. I got in a conversation one time with somebody, and it was like an in-law, and they told me that, oh, my accountant, let's just say in a different state, charges me $75 a month to do my tax. I'm like, great. If you feel comfortable giving somebody your social security number, your kid's social security number, where you live, your bank account information, where your house is, and they're saying, okay, here's $75, I'm like, okay, because I wouldn't do that, right? So if I'm going to give all that information to somebody, I'm going to make sure and not later on point fingers and say, I did my due diligence and I pick somebody licensed, that's a CPA that you can look up and they're verified and all that stuff. Because again, me, I do a lot of businesses. I take on individuals here and there, but what I'm telling everybody out there is just don't go to like one of these shops. Like if you're a college student and you want to do your own taxes, go ahead. I tell people go ahead. It's nothing complicated. Once you start bringing in family, real estate, being a homeowner, starting a business, then you need to go to a real professional. That's kind of the green light to do that. But again, it's like you're gonna lose a lot of money and miss out on a lot of stuff if you don't use the right CPA. So now I'm not just saying use me. I'm saying just go do your due diligence, use a CPA. Right. But all CPAs, you gotta understand, aren't created equally, right? There's within the CPA world, you gotta understand it's like a doctor. There could be 100 doctors, 50 of them could be good, 50 of them could suck. Just like CPAs, there could be somebody that are good, somebody's bad. So it's kind of like you got to have conversations with your accountant just to make sure they're knowledgeable, know what they're talking about and all that stuff. And if you're not comfortable with them, you can compare, contrast, and talk to other people and just make sure you're getting the right advice.
Now, here's the thing. As a tax preparer, and there's a big difference in the fees. But listen, if you're really going to be an entrepreneur and you really want to start a business and have a legitimate business, it's worth the money investing in a CPA right off the rip.
Right.
It just saves a lot of problems. And we're going to talk about some of those problems. And COVID happened. A lot of people didn't get PPPs. But before we get to that, right? So clients are looking to start a business. And this is why we did the business credit class. And you're in there as well. But everyone is saying, hey, I have a tax ID. I have a business.
Right.
No, you don't. Right. There's a lot more that you have to have in play when starting your business. And, some of the things are like profit and loss statements.
Right.
Proper tax return. And I have a lot of clients, and you know this too, I tell you about that. Even if your business is not doing numbers 1 year, you should still file your tax return personally and business and file a 0 to keep the paper trail.
Right.
Can you shine some light on that? And am I saying it right? Because I think a lot of people are misled by this.
Right. I mean, there's different types of businesses, right? There's you can do a DBA, which is not a legal business. That's just you doing business as John's Mechanic Shop. So there's no legal protection. There's not a separate entity. You get a tax ID, you open up a separate business account, and you go. There's no, that's whatever. Then there's LLC, there's S Corps, there's C Corps. So with LLCs, depending on if you're just the owner, there's different rules than like a S Corp or a C Corporation. So anytime you have a business, you want to make sure that you have a separate, you have to keep the proper books and records. In order to keep the proper books and records, you have to make sure that you have a separate business account. So as soon as you have an idea or a vision, you want to make sure you put everything in a separate account. And then in that account, you have to itemize everything. So I always tell clients that I pick up or I talk to is initially you want to kind of minimize your expenses because you're starting up. So initially you can do stuff yourself, keep track of it, Excel spreadsheet or QuickBooks or whatever. As the business grows and you generate more income and revenue, then you want to kind of outsource that function to somebody that can help you out. You understand? So with a corporation, when you do set up a corporation, let's just use the state of New York, you have to file that corporate return every year. So even if it's 0 or dormant or not doing anything, you're going to have to file every year. That's just the law in the state of New York. So you just can't be like, I open up a corporation, I haven't filed it in 3 years, which I get a lot of. They expect you to file. Even if it's blank, they want their minimum fee, and then that'll keep you active for a period of time and so on and so forth.
But it just saves you a lot more headache down the road because now when you got to go get transcripts for 3-4 years behind and get current, it gets costly and it can cost you more money, right? So it's very important that, when you start your business, not only do you, and I want to talk about the difference between S Corp, LLCs, and what should people start using as a small company, right? Because everyone's starting off small.
Right.
Then they're going to, depending on how you run your business, you're either going to go big or you're going to end up closing your business. Who knows? But what's the difference and what's the best way? And I think, I don't know if this question is going to be for other states or only New York. What should be the best entity to start?
Sure. I mean,
like S Corps and all that stuff.
People typically would go with like an LLC because it's easy to maintain. But to me, again, there's a lot of moving parts, so the answer changes, right? So if you're going to do a service type business, S Corp, no brainer. If you're going to do real estate, it's going to be an LLC, no brainer. If you're going to do a management company, it's going to be an S Corp, no brainer, right? If you're a person abroad that wants to invest in real estate, it's going to be a C Corp. Again, all those answers are subject to change. There can be something specific in your situation that could change it. But to me, in my situation, if you're like in Nassau County, outside of New York City, or even in New York City, and your work is, let's say, web-based, where you're selling product online and not specifically to New York customers, S Corp. So I'm a big S Corp guy because number one, it's cleaner, more administration, but it'll save you more in taxes. You have a separate business return. It's a lot cleaner, and your audit rate is about 1/5 of an LLC or a single member LLC, which a lot of people use. So a lot of people end up starting out with an LLC because they don't know any better. Oh, I have an LLC, I have an LLC. But then they end up doing a classification to treat the LLC as an S corporation. So that gets costly. So the key is, if you want to do something, do it right from the beginning, because then you're going to end up paying somebody like me to more than you initially paid to set it up the right way. So at the end of the day, you want to make sure the company is respected as a separate company. Your audit rate isn't like, what do you call, crazy. It's a lot lower, and your tax is a lot lower. So with an S corp, you can get there, right?
Gotcha.
But S corps are limited also. You can have foreign persons owing an interest in an S corporation. You can have different levels of stock in an S corporation. So if you can have a partner and you can have different rights or units or whatever, you can have an S corporation. Everybody's got to be treated the same in terms of an S. That's why real estate, you do an LLC, because you have a guy that's managing the real estate, and then you have other people that just put money in.
Gotcha.
So that case, you go in an LLC every time. You can't do an S corp, but specific to real estate.
Now, COVID happened. A lot of businesses shut down. A lot of people claim that they had businesses or they have a business and it wasn't conducted appropriately, and they couldn't get PPPs
Right.
and SBA loan. Let's talk about that, how important that was. A lot of people lost out on a lot of free money.
Right. I mean, but you got to look at and dissect all the people that did lose out on the money. So the way it worked is, let's say typically the people that did lose out on the money didn't physically have payroll, right? So the people that were like self-employed.
Mm-hmm.
So what happens with a lot of people is they get greedy in the terms of they don't want to pay taxes. I don't want to pay taxes. The government's not going to get my money. So then what they do is, okay, they show income of, let's say, $100,000, take $90,000 in expenses, $10,000 profit. They get the earned income credit. They get free money here. They get this, that. But then PPP hits, and they're basing it on your net profit. So when they base it on your net profit, you're going to get a few $1,000s, and then they're going to complain. But that's what the story your tax return told. The story your tax return told, which technically should be the right story, is, hey, I didn't make a lot of money. So then if you didn't make a lot of money, how do you expect the government to give you more money than that you took in? Because if your year is plus 10, why are you getting $50,000? It doesn't make any sense. You're profiting off of the pandemic, and typically it doesn't make sense that way.
And there was a lot of scams also.
Right.
A lot of people were getting free money, filing fake paperwork, and that's going to come to a halt because IRS is now open up. They're investigating all that stuff, right?
Yeah. So basically, I mean, what happens with the PPP is, I mean, it's from a person looking from the outside looking in, it's very easy to commit fraud in that setting, especially the PPP, because when people apply for the PPP, the lender, whoever it was, whether it was an online lender or your bank, they didn't ask for transcripts, right? So that's when things become a little crazy, because when you don't ask a business or a personal individual person for transcript, you're not verifying the information, whether they filed a return and how they filed it. So they can just generate or manufacture a Schedule C or a tax return, submit it to the lender, and then they get the money, no questions asked. Well, that comes back to you when they start auditing this stuff, and then they figure out who filed their return, when they filed it, and that's when a lot of people are going to get, have problems.
Interesting. I didn't know that. That's interesting. So here's the thing.
And then you have the PPP and you have the SBA too. So the PPP is closed. SBA works a little differently. That's a conventional loan, 30 years, 3.75%. Pretty much every business should be able to get that. So, and if you got turned down on the SBA loan, they can turn you down because your driver's license was in JPEG format instead of PDF format. There's a bunch of different reasons. But if you need the funds, the SBA loan is a very easy way to kind of get it. It's not that complicated.
And do you guys do you help businesses with SBA loans?
I mean, the way I do it is, if you're a client of mine, I can help you with the SBA loan because we already have access to your number. So it's very easy to do. I'm not going to charge you $2,000. I'll just help you out because I'm your advisor. I'm not going to be like, oh, here's the profit generator, right? It takes me 2 minutes to do the application. PPP is a little different. Again, PPP, same thing if you're a client. If you're not a client, and if I know you, I'll give you advice on it. But outside of that, you can do it. It's not that complicated. But a lot of people charge $3,000, $4,000.
And that's a ripoff.
And it's a complete ripoff because it's literally half an hour to 1 hour worth of work. And again, a dentist works for an hour and he gets paid under $800, right? So if you're a professional, if you're a licensed professional, yes. But if you're like just a tax preparer and you're providing that service, where are your credentials? Right? You're mimicking an application, creating a Schedule C, submitting it, and if something comes back to you, you're on the hook. You sign the paperwork. They don't sign the paperwork. You sign the tax returns. They don't sign the tax return. So you can't say, hey, they did it that way. No, because you're making a representation on a tax return that you reviewed it, and those numbers are the right numbers, right? So you got to make sure you're aware of that.
And there's a lot of people on social media talking about, hey, to register your company, to trademark your company, my fee is $2,500, and that's absurd. Right?
Right.
That's not what it is, and they're just completely ripping you off. What does a normal typical fee cost for a CPA like yourself to do something like that?
Right. So I mean, again, you got to kind of break it down. Some businesses you don't need to trademark or patent or whatever. So the business registration fee, again, you can go to like a place in Queens and they'll charge you $300 to set up an S corp, right? We usually charge between $600 to $800. That's the fee. Lawyers can charge $1,300, $1,400. So it's based on what's good margin for the company you're working for, right? But you got to understand. So I'll give you a good example, like a LegalZoom. LegalZoom is good. It's fine. You can set it up, but you got to understand something. When you set up a company through LegalZoom, that's it. You set it up. You don't get the advice. You don't get the hand holding. You don't get the initial stages of, hey, you have the company. You got to do this. Keep track of this. Keep track of that. So now you just paid LegalZoom, probably similar to what I charge for an S corporation.
That is what they charge.
They're gone, right? So that's what it is. So now when you're at the $2,000, $2,500 level, that doesn't even make any sense. So that's something like, if you want to trademark something, that's a separate situation. You got to see if you're professional services, you're usually not going to trademark something. If you have an idea, that's a separate cost. So setting up a company can range between $600 to $800 to $1,200 to $1,400. If you go to California, they have higher registration fees. If you do a Delaware company, they just have higher registration fees. So that we can't eat the cost, we pass it down to the customer. So those are the different moving parts also. Also, the type of personality you are. If you get it and you trust the CPA to do the job and all that stuff, the fee will be manageable. But if you have a client that asks 100 questions, you're going to be like, listen, I got to charge you for my time also.
Gotcha,
so you have to
gotcha.
build into the cost of the company as well.
That's interesting because, like I said, a lot of people on social media making a lot of noise just to scam people, and people are just caught up on this stuff because they don't know better. That's why we do these videos. One last thing I want to talk to you about, though. Very big. And
Okay.
you and I had this
Rewind back. Speaking, I have to get this off my chest, right? So
Go ahead.
somebody sent me a text message, some guy, CPA, saying, open up an LLC and run your car payment.
that's what I was going to. That's
what you just said.
that's my next question. I want to talk about that.
I mean, I would love him to put that so the IRS can come and take a look at that. It doesn't make any sense. Understand something. The tax deductions are tax deduction. If you look at the tax code, the tax deductions are irrespective of what type of entity you have. You can be sole proprietorship, you can be a Schedule C, you can be LLC and S corp. Tax deductions are tax deduction. It has nothing to do with the type of entity you have, with limited exceptions. So if you buy a vehicle, I open up an LLC. Look, I get a G-Wagon for $160,000. Think about it. It doesn't even make any sense. So your income is zero. Your expenses are $150,000. You have a loss of $150,000. Do you think the IRS is going to allow you to take that $150,000 loss? It doesn't make any sense. You have to have, if you're like Drake, you can deduct the $150,000 car, right? Because you have the money and the income to support it. So the more you make, I'm a big fan of the more you make, be aggressive in terms of what you can deduct because you're making that money.
Right.
And when you're self-employed, when you're an entrepreneur, everything you pretty much do outside of going to the department store or getting a massage or whatever is deductible. You can kind of connect the dots on an expense and it being related to your business. And you can marry it to that. And as long as you can marry it to the business, it's wide open. You can deduct whatever you want. But to give somebody advice saying, hey guys, we can get a boat, we can get a plane. Yeah, if you're Jay-Z, yeah, it works, but you're not in a position to get a boat or a plane. You have to be more, realistic, right? So you can deduct it within reason, but some of these people, they just, I don't know what the motivation is. Maybe they lack, self-confidence. Maybe they need clients or something like that, but that's not the way to go about it. You have to first make the money, find a way to make the money, get the tax deductions, and that ultimately is going to reduce your tax liability.
We got to say that again, man, because I know a lot of people that's preaching that whole message.
Right.
You have a business. You have to make revenue in order to write your car or other expenses off. You can't have no revenue and have a $200,000 expense. Like, do you understand that? Like,
right.
And that's what
people don't get that. That and the other one people don't get, honestly, is the whole real estate thing. People think that rental property and buying or investing in real estate is going to give them a massive deduction. That's not true. There's people that flip property. That's flipping property. That's not a business, right? You're buying a property. You can't deduct your car for buying a property. What are you doing? Driving to the property every day to look at it and look at the soil and watching all that stuff. It doesn't make any sense. A business is different than that. So now, if you're a Donald Trump type, he's in the business of real estate. Those rules are different for him. But if you have a W-2 9-to-5 job and you have a couple of properties, the real estate professional real estate rules don't apply to you. You're limited in terms of the losses you can take. So you can have, I have a lot of clients that are doctors, so they'll make a couple $100,000 or $300,000 and they have rental losses. They can't take them because the tax law works. If you're not a real estate professional, you have severe limitations on the deductibility of your losses. So you have to be made aware of that. So don't think that you made $100,000, you take the 100, put it in real estate, you can deduct it and you're break even. It doesn't work that way.
Right. So I mean, guys, there's a lot of information on social media that's incorrect. It's false. And listen, at Y2K, we're trying to be transparent with you guys as much as possible, and that's why we speak freely about things. If you have any questions, I'll let Jay leave his contact information. You reach out to him. Very personable, customer service on point. Listen, you pay for what you get, right? And if you want to be a serious entrepreneur, you want to have business credit, you want to be able to get your write-offs, and just be legit, then he's the man you want to talk to. Jay, give him your contact.
Okay, you can reach me at, you can call the office, 516-492-3395, 516-492-3395. I don't have social media. I'm not a social media guy, sorry. Y2K land. But if you're going to reach me, it's the office. And then if it's a match, we can have a conversation. And I like dealing with people that are excited to do things, right? So, and they have a good vision and a little bit educated so that they know what they're getting themselves into, right? And I can kind of connect the dots, fill in the blanks for them. But, you know, if you have questions, we got the answers.
One last question I want to ask you. People are talking about, hey, I could buy a car, put it under the business. I don't need to PG it. Right. Person guarantee it. Mm-hmm. But that's actually not even true. And I could testify to that because we just bought a new car under the company. I had to PG it. The company has credit. Right. We have an enormous income. And I still have to PG it. Like, I don't understand why people are thinking that, or this is what they told on social media. You can put the car in your business. You don't need to PG it. Like, especially if you go to a major bank. You've done cars, right? You have the Range, the i8, all the toys you have. Right. And you're leasing under your business. But did you PG it?
I mean, at the end of the day, you got to understand, auto expense is a business write-off, right? So whether it's in your name or the name of the company, as long as you're using it for business purposes, it's basically, as long as you're making the payments from your business account. That's at the end of the day. From a PG standpoint, I mean, I don't think anybody would like, if you don't have unless you're Microsoft, you know, maybe there's exceptions, maybe there's different banks that have separate exceptions or whatever. You'd have to check with the car lender before you take a tax advice about how car lending works from a tax guy. I wouldn't do that. I would just go to the source and tell them, hey, listen, do I have to PG this? And chances are you do, because they're not going to just let you use a car and it doesn't make any sense, right? So if something doesn't kind of make sense in your head, you want to reach out to your tax person or tax advisor. Gotcha. Right? Honestly, there's a lot of scams out there. You know.
Thank you for saying that.
I don't need to, you know, scam people to make money, right? I have my book of business. I do run things very professionally. I can tell you what's a scam. And again, people have risk tolerance, right? Some people are comfortable being a little more aggressive, right? And whereas some people are more conservative, right? So you got to figure out where you're at. But at the end of the day, some people are completely reckless when they do certain things, right? They'll take stuff, credits, tax stuff that completely they're not eligible for. At that point, you're just playing, again, you're on the honor system with the government, but you're kind of playing Russian roulette. So if you have families, you have kids and all that stuff, why take chances over a few bucks? You understand? So I tell people, do it the right way. You got wiggle room here, you got wiggle room there. And there's people that have saved a lot of money and amended their returns because their preparer didn't know what they're doing, or they didn't take the right deductions, or they didn't think they were eligible for this and they're eligible for that. And they ended up making triple what I charged them for the year. So, you know, you just got to make sure you have the right person that is in charge of your finances, of your social security numbers, of your kids' social security numbers, and all that stuff, right? Just don't give it away and be like, oh, here's $100. Do my taxes, because they have a lot of information, and that's why there's a lot of fraud out there. Yeah. Like you see it, people think, oh, there's fraud because my daughter left the driver's license in the subway or whatever. No, that's not the case. It's electronic. A lot of these unregulated tax preparers use that information, and they don't have, you think a guy that's charging you $75 for a tax return has got the right security on his server?
On his computer's right.
On his computer, you think it's got the fancy antivirus software upgrade? I don't think so. You know, so that's the decision you guys got to make. You know, so my thing at the end of the day is use a professional guy, use a CPA. Don't use, and anytime there is, so a lot of times when people come to me, I would say 95% of the time that they come to me and they say they're using a CPA, they're not using a CPA. You know, you can tell by the name of the company. In the state of New York, at least, you have to have CPA in the name of the company. It has to say, like, our company says Bakari Consulting CPA PC. Right. If it's a corp, it's got to say PC in there. It's a professional corporation because we're regulated, we're licensed. If it's something like, worldwide tax services or honest tax services or XYZ tax services or whatever, they're not a CPA right off the bat, right? So you have to make sure that and this is part of your research and your education that you got to go, because that's the only way you're going to get better. You learn from the CPA. Maybe the CPA sucks. You go to another CPA until you have ultimately a good match that can help you and all that stuff. But at the very minimum, if you're dealing with a CPA, at least you know your information's secure at the end of the day.
So here's one last thing, and it's actually a personal thing that I've done, and I'm doing it that you helped me out with. So I own a boat, you guys know that, and two things I want to talk about here. One, is it true or not true that the car, if you put a car in your company name and your name, does not have to be registered under the company for it to be a write-off, as long as you're paying the car payment to the business account?
Right.
Is that correct?
Yeah, because the IRS looks at substance over form. So the form is legally this person owns it, but they look at the substance. That's the tax law. So substance is, what are you using it for? I'm using it for business purposes. You can very easily show that. You can show a log of how it was used, whether it's an airplane or whatever. I mean, to make everything look streamlined, you can have the business own it, have an LLC own it, all that stuff. But if it's not the end of the world. You can transition to the ownership later, or you can deduct it. It's not going to prevent you from losing the deduction.
So here's the second thing I want to talk about, and this is where you started helping me out, because I didn't know about it. So I bought the boat, and I rent the boat out, but I wasn't doing it properly to the tax laws or to have the write-offs, right? So what we did was that we created a holding company, put the boat in, and I think a lot of people need to know that if you're gonna get into business like Toro or any kind of, you want to rent something out, you should you create it in, what entity should you create that? Should it be like a holding company or LLC?
Well, by definition, typically a holding company holds an asset, and typically a holding company holds a income producing asset. Whether it's a house as a rental property, a boat as rental property, you rent it out to clients or customers or to your own company, or so on and so forth. So that's a holding company. Typically, a holding company holds an asset. It's not a business. It just collects rent. So that should be typically an LLC.
Okay.
And it should be an LLC in the jurisdiction or the area you own that property. So if you're going to buy a property in Pennsylvania, you want to have a Pennsylvania LLC. If you're going to buy in Colorado, you want to have a Colorado
Gotcha.
LLC, so on and so forth. Then you want to have its separate books and records and its own bank account and all that stuff. So that's the way you want to do it.
All right, guys, listen, if you have any questions about this topic or this video, leave a comment below. This is going to be on our YouTube channel. Subscribe to it. Again, our business credit class is August 9th. It's a 5-hour Zoom class, building and fixing business credit from A to Z. Jay is going to be in there. His contact information is in there for the CPA. Our social media guy, he's going to be in there as well. So if you need someone to create your social media, our attorney's going to be there. So we're giving you all these contacts, legitimate contacts, not no fugazi trying to hustle you and make money like everybody else on social media. People that's really going to guide your business, get you up to be a legitimate business and be successful as an entrepreneur. So if you have any questions, leave a comment below. Myself's going to respond. Jay's going to respond. It's for him. He's going to respond. Again, this is going to be on our YouTube channel. Click the link in our bio, subscribe to it. Talk to you guys soon.
Take care, guys. Have a good day.